Welcome to Pretty Broad Pod. My name is Mary. I'm a commercial real estate agent in Omaha, Nebraska. While my daily focus is real estate, the podcast will cover a broad variety of topics, hence the name. This is the very first episode of the podcast, so please bear with me while I iron things out. We will not be on camera today due to some long distance logistics, but I plan to be on camera often as the podcast continues on. My first guest is a good friend of mine. I've known him for about 10 years. His name is Andrew, and he lives in Arizona. Welcome to the show, Andrew.
Thank you for having me.
Yeah, how is it not having to deal with daylight savings time today?
Good. I don't even know when that occurs. My computer changed an hour, and I'm like, why? And then I just changed it back because we're in Arizona. We've never done that.
That's so weird that it changed for you. Yes, it's definitely not supposed to. You're really lucky. It always weirds me out a little bit. It doesn't matter whether we go forward or backwards. It was yesterday, by the way, at 2 a.m.
So are there just 2 days of a year where you're just an hour late suddenly for whatever you had planned?
Yeah, exactly. You're either an hour late or you're an hour early and your sleep's all screwed up and you're confused.
Just a whole city in a fugue state for one day? That's screwed up.
Exactly. I'm sure churches see it the most because people are showing up for church on Sunday morning, either late or early. Well, Andrew, you are well versed in cryptocurrency, and that's what we're going to talk about today, the ins and outs of that. You're also well versed in comedy, I know, so hopefully you can be at least a little funny and entertaining for everybody too.
Okay, I might drop some bad words when I get into something. Is that all right?
That's fine.
We don't have children listening to this?
I hope not.
Are there any children crypto traders on your channel? Probably not yet.
Probably
Okay.
not
All
yet.
right, well, they're going to
Do
have to
you?
get this.
But you have children crypto followers on your
No.
crypto pages? No.
No, go
All right.
outside.
Well,
Play on your bike or something, kid.
right? Don't be trading on the computer. You're too young for that.
This is for when you've already given up. You trade this stuff as a last resort.
Exactly. This is the last ditch effort.
Yeah.
This is adulthood. Sorry, I know very little about crypto or how it even started or came to be. Can you tell me, was there a problem crypto was originally designed to solve? Is that how it came about, or kind of what was it?
Yes. Bitcoin, the first cryptocurrency, was invented to counter fiat currency's natural debasement. So fiat is like the dollar or the ruble. In plain English, the dollar inflates in that its purchasing power gets smaller every year. So $100 now has the same buying power of just $1 from 100 years ago. The 2008-2009 financial crisis was the last straw, so we couldn't trust the government or the banks to keep the dollar stable as they keep trying to print themselves out of debt, which just makes the dollar worth less and less. So Bitcoin, by comparison, has a hard limit of just 21 million coins that can ever exist. It's decentralized, meaning there's no government, bank, corporation, or a crooked politician that can control it. It gives power to the little guy with equal access to everyone, no matter where you are. And you don't need to trust anyone but yourself. So if your country's currency fails, Bitcoin's value remains steady, acting as an escape hatch because it can be instantly converted into any currency you choose. I once joked that if Bitcoin is suddenly worth $50 million a coin, it's because the dollar has failed. If the US government and the Federal Reserve were doing a good job, Bitcoin would be worth nothing. But look at Bitcoin's chart. It just goes up and to the right no matter what's going on in the world because distrust in banks and governments never ends.
Wait a second. So there's only 20 million of these coins. Like you can't make more of them
No, 21
ever?
million is the maximum. Yeah.
Huh. Interesting. Honestly, it kind of blows my mind. I didn't know that. How did you get started with crypto personally?
November of 2017, I was working my regular job as a designer, and I'm just into the tech stuff. And I got a Coinbase account, and I bought 10 Ethereum when they were around $400 each. And that was actually the cycle peak. That was the worst time to buy it then, but I didn't know any of that stuff. So I just bought 10 Ethereum, and then I watched videos on crypto every night after work instead of spending time with a girlfriend or something. And I learned about crypto obsessively. I bought half a Bitcoin when they cost $5,000 a piece. And a few years went by, and I sold it all at 10 times what I paid. So I was hooked immediately. I could buy, sell, and trade crypto instantly whenever I wanted. I didn't need to wait for or trust anyone. It was so much faster than trading stocks, and the crypto market never closes.
Oh, okay. Well, this all sounds like a different language, like Ethereum and blockchain, and I don't know any of the words. It's brand new to me. Can you explain blockchain, for example, to someone who's never heard that before?
I'll give you the correct definition and then we'll translate it to English. Okay,
Okay.
so a blockchain is a decentralized digital ledger that securely records transactions in a series of linked blocks, making it tamper resistant and transparent. You can't undo anything, you can't change a transaction once it's happened. So each block contains a cryptographic hash of the previous block, a timestamp, and transaction data, ensuring the integrity of the entire chain. So that might sound hard to grasp, but all you need to know is this thing is a much faster and far more secure way to transact any type of digital data. So the first thing people did with it was send money on it. So, especially compared to our current system of a bunch of banks, each with its own country's regulations and taxes and corrupt people behind them, they're all kind of band-aided together. So, Bitcoin's blockchain, instead, it's not the fastest by today's crypto standards, but it's practically unhackable. I mean, anything is technically hackable, but it would require the entire world's computing power to hack the Bitcoin blockchain, costing more than it's worth. So some listener is going to hear me say that and go like, what about quantum computers? They can hack Bitcoin. Well, yeah, they can hack banks and major retailers and governments and credit card companies and the stock market way easier. And that's where the real big money is, so it's a moot point. Every cryptocurrency runs on its own blockchain, sending transactions along it super fast with major security, or they piggyback on some other chain, but some are better than others. Bitcoin is the first one and the example of strength and trust in the space. So Bitcoin can be used as a currency, but that's not its main purpose. It's more of an escape hatch or a preservation of value, like digital gold.
Okay, so Bitcoin was the original. What is an altcoin?
Yeah, Bitcoin is the original cryptocurrency. That's the first one. There's no company behind it. There's no building to infiltrate. There's no CEO to compromise. No scandals. It's totally decentralized, global, and considered a commodity like gold or crude oil. Altcoins are any other cryptocurrency, which for the most part are essentially software companies trying to be the next big dog in an emerging space. They range from total nonsense gambling junk to actual solutions for the technological advancements in our near future. There is a lot of work to be done to get us from here to there, and the best altcoins provide some service or answer for what we'll need. Turns out you can do a lot with blockchain technology. Stable coins, like Tether, are the most immediately useful, and that's why they're being regulated first by the US government, since they speed up financial transactions, similar to sending a text versus handwriting a letter and handing it to a guy on a horse. It's that much faster compared to our current system of banks. So you exchange dollars for the same number in stablecoins. You do a bunch of lightning fast transactions, then convert the stablecoins back to dollars at the end. So there are no banks, there's no waiting days for settlement. I use stablecoins to trade crypto. Other big name altcoins like Ethereum and Solana have proven staying power, and companies are building things on top of them, ranging from Web 3.0 plans. Right now we're in Web 2.0. The next version of the internet is being built on these blockchains. And then you have applications, video games, tokenized assets, and more. So you also have gaming tokens, which have a short shelf life but allow virtual worlds to have actual economies and marketplaces. Some
Right.
altcoins are just used to pay fees on exchanges like BNB. So Binance is the largest crypto exchange in the world. And if you want your crypto listed there, that's where all the action is, you have to buy BNB. So that provides regular buy pressure on that coin. So it's consistently valuable as long as Binance is operating. Then you have about 20 million absolute pieces of shit that do nothing, like Fartcoin. They're traded purely like a casino. We call these shit coins. That's the real term for it, shit coins. These tend to pump and dump quickly, and they're only for degenerate trading, not investing in. Every once in a while, the shitcoin sticks around and becomes a household name, like Doge.
Oh,
Doge
yeah.
is the most well-known shitcoin. It actually functions well as a fast payment system, but there's just no use case for it. So Elon Musk says he's working on a tipping system for X, Twitter, that would use Doge. Okay, sure, but for now it's just a big shitcoin. So another example is Trump's coin. That's a shitcoin. Now, some people make money on shitcoin investments, but most people don't. Like, hey, somebody's going to win the lottery, but it won't be you, so stay away from them.
Okay, but my question is, okay, so somewhere this all started and somebody is creating these different ones, right? So if there's only 21 million, how are there new ones coming out? I don't understand that whole concept.
Oh, the Bitcoin blockchains. There can only be 21 million Bitcoins. These
Okay.
the altcoins are their own blockchains, and you can build those pretty quickly now.
So
So,
can anyone just be like, I'm gonna make cryptocurrency and this is mine and it's a fart coin? Like, where does that come from?
yeah, I mean, I'm not a programmer. I don't do that. I don't make shitcoins. But apparently, it's real easy to make them now. And that's the
Who
problem.
started doing this? Who was like, I'm gonna make Bitcoin?
Um, white guys with greasy ponytails who usually just play World of Warcraft, or like the Indian dude equivalent to that, those guys. They figured out how to make these rapid fire. And if you can get an audience behind it, like Pepe, Pepe, their logo is this little frog. He's like a meme. That's another shitcoin that took hold. Like if you can just be the one in a million that for whatever reason is popular for a while, it can generate a lot of value. But I generally stay away from shitcoins because I'll day trade anything, but I'll only invest in a handful of things, which I can get into again later. But it's
Well, there are a lot of strong opinions about Bitcoin, about all of this. What would you say is the most common misconception about crypto?
like any emerging technology. The big fear is that it's all a scam, and I assure you, only 98% of crypto is a scam. The remaining 2% will carry us into the new technological age. The challenge then is picking the right horse and riding it into big money. Just like the .com era, there were a million websites with big promises, and about a dozen winners made it out, like Google was one of them.
Right. Okay. What fundamentally drives the success or the decrease of crypto? Would it be technology, speculation of the public, or is it Kramer? Because I've seen you say that Kramer, what he says, you do the exact opposite. Is he a pretty big driver, or
Oh, Jim
what is it?
Cramer is not just for crypto. It's more of a joke where there's actually an inverse Cramer ETF. I mean, he's so wrong so consistently that if you just do the opposite of what he says, you're more successful than Nancy Pelosi. So there's an ETF that just copies Nancy Pelosi's trades. She's an insider trader. She's cheating. You can still outperform her if you just do the opposite of what Jim Cramer says. So,
That's awesome.
what fundamentally drives crypto? The same thing that drives all innovation. It's the need to be faster than our enemies.
When you're looking at a project or a new coin or whatever, how do you find the ones that are legitimate or something that's just hype? What do you personally look for when you're investing in it?
Good question. The first thing I look for is what problem does this blockchain or coin solve? How is it better at doing that than the other guys in this space? Because a lot of these coins are just solving problems that we don't have yet, but will have if people start adopting this thing more widely. So, who's behind the project? Are they trustworthy? Where is the capital investment coming from? Is the coin sufficiently decentralized, or is some shadowy person going to rug pull the whole thing? Where does the buy pressure come from? And is that sustainable? If a celebrity is tied to it, I'm out. Kanye West coin, no thanks. If it's a meme, I'm out. I'll trade anything, like I said, sure. But to invest in something, especially in crypto, my standards are very strict. So for that, I stick to Bitcoin above all, and my altcoin bags change seasonally. But I usually always have some money in Ethereum and Solana at least.
Okay, and those are just a specific altcoin,
Yeah, those are
correct?
big boys in the
Okay.
altcoin space. Yeah.
Okay. Other than just new technology, do you think there's anything else that makes people scared of investing in crypto or nervous about it? Because for me, I still feel a little weird about it. And I've watched you and your family have a lot of success with it. And I'm still like, ooh, I don't know. It just, something about it seems strange. And maybe it's just because it's so new.
Yes, crypto is new, so it's largely unregulated. And although Trump's administration is getting things done for us with regulatory clarity, it does take time and this is a lot of stuff to cover. And the government is slow to get things done. You know how that is. But uh, they,
Yeah.
they see the value in it and they want all that money here in the US. So a few things scare people about crypto. First, with crypto, you have total control and complete independence with your money. But that also comes with responsibility that you're not used to having. So you have to protect your coins yourself in a private wallet. It's your money and nobody else's, meaning you're the only person who knows the password. If you forget your password, you're screwed. There's no company that can retrieve it for you since you're the sole custodian. So if you click on like, oh, I forgot my password, there is no option to do that. No one has your password but you. The other option is holding your money, your crypto coins, on some exchange like Coinbase or Binance. The problem is, historically, these exchanges aren't perfectly reliable or trustworthy. They are most of the time, but if one of them fails due to poor management, it's a real problem. So, like, if the exchange goes down and your coins were on there, you may never get your money back. So, when you buy, sell, or trade your crypto on an exchange, remember to put the coins back in your private wallet when you're done, just in case there's some big scandal like Mt. Gox in 2014 or FTX in 2022.
Are these the security risks that you think people underestimate the most when they're investing in it? Or are there others that you would want to tell people about?
Like the China thing.
Yes, the
Okay.
what happened with China? I mean, I remember you telling me that basically money was just gone.
Okay, so I'll get into the security risks and then we'll go into my spiel about what happened with China. Okay, so when you make your first private crypto wallet, either a hot wallet or a cold wallet, a hot wallet would be something like Exodus. A cold wallet would be like Trezor or something. It's actually a physical drive that your crypto stuff is on. Anyway, when you make your first private crypto wallet, you'll get an elaborate passphrase of words and numbers. You write that down on physical paper and hide copies of it in safe places, like a safe deposit box. Do not ever have your passphrase written on your phone or your computer or in your email. Those can and will be compromised. When somebody cries about their crypto being hacked, often it's because their passphrase was in their Gmail account or something. And as for the recent mega dump on October 10th, that's what we were talking about. If you just hold spot, like you just have some coins in your private wallet, you were fine. Nothing happened to you. That day was tragic for leverage traders like me. See, in the US, you can't margin trade crypto as a little guy. That's how you potentially make really good money fast in crypto, is through margin trading. Now, as a result, if you want to trade with leverage like I do and you live in the US, you have to do it on a foreign exchange. And many of these foreign exchanges are backed by Binance, who is in China. Binance provides the liquidity to settle orders on these little exchanges. So then, Trump says he's going to tariff the hell out of China, and Binance immediately pulled the plug on these little exchanges. So if you had open trades, limit orders, stop loss orders, take profit orders, like I did, they all got ignored. You were locked out, frozen in place, and watched your positions get flash liquidated up and down, meaning your money just disappeared. And some people lost millions of dollars. I won't say how much money I lost, but it was a lot. I've since gotten it all back because I'm a friggin' stud at trading, But a lot of people were just wiped out and they're gone now. And it looks really bad on crypto, even though it wasn't crypto's fault. It was a counterattack, theoretically, by a Chinese company based on what Trump threatened. So if the US offered leverage trading for us here, Binance would go under in a week. All that money would come to and stay in the United States. But instead, we can't leverage trade here, so we run the risk of getting randomly stabbed by the Chinese. And again, none of this is something for the spot buyer or investor to worry about. But us leverage traders get wiped out pretty hard every so often because of this problem.
Can you explain to people who don't know what leverage trading is, what it is,
Yes.
and why we can't do it here?
Okay, well, you can't do it in the U.S. because they say they're protecting you by not letting you do it. So, like, if let's say I have $100, I don't have a whole lot of money, but if I'm doing 10x leverage, that $100 acts like $1,000, and I'm trading using that. The potential gains are now 10 times higher, but the potential risk is also 10 times higher. So if you don't add margin or don't have a stop loss, if the trade goes the wrong direction, the losses are now 10 times higher. So you that's what liquidation
you lose your
is.
house.
Yeah, or you just lose whatever money you put in, right? So the higher the leverage you're asking for, the tighter your leniency. So if you only have 2 or 3x leverage, you're pretty much good. If you're going full degen, trying to run 20, 30x on your money, if it goes 2 pennies in the wrong direction, you get wiped out, and the exchange just takes your money. And that's
Right.
that's fair. Like you usually have a smaller pile of money that you put leverage on, because if you call the trade correctly, you're making way more money compared to whatever your $100 could have done on its own. So that's where leverage trading attracts a lot of people. Where my background was in trading stocks, just with spot money, whatever I was earning for my stupid graphic design job. Now I take that same amount of money and I'm trading crypto at 2 a.m. against the Chinese on 10x leverage, and I've suddenly made $8,000 in an hour when I should be sleeping. I'm like, that would take me 2 months to make as a graphic designer. So it's worth it to learn how to do it, but every once in a while, you can get completely rugged by, apparently Binance can do that. So the question for me was, now I have to find a foreign exchange that is not given or provided liquidity by Binance, and that includes Blowfin and Femex. If you're a crypto degenerate, you're looking for a place to go, Blowfin and Femex were 2 exchanges that did not take a hit from this big rug pull thing. I was on Levex. I love Levex, but they got destroyed, and so I got pulled down with them.
Speaking of, let's go to this question. What role does crypto play in countries with unstable currencies?
People in the US don't even consider this because we've been so comfortable here for so long. But if this shit hits the fan, like if BRICS wins and the dollar is suddenly hyperinflated, you only have one place to go. That's the gutter, or you'll be fine if you have some Bitcoin. So some examples recently. Bitcoin has saved people when their country's currency hyperinflates or war and corruption take over. In Turkey, when the lira collapsed a few years ago, some stores were accepting Bitcoin until inflation got more under control. At the time, people were wiping their ass with cash because toilet paper was too expensive. Their money didn't work. But if you had Bitcoin, you were fine. During the Russia-Ukraine war, a man fled Ukraine with his girlfriend. I can't remember his name, but I'll find the article. He flees Ukraine with his girlfriend, and although his wallet and jewelry were confiscated near the border, he has some Bitcoin on a cold storage device, his private wallet. Once he got into Poland, he was able to immediately trade his Bitcoin for the Polish national currency and survived. So these are small but real examples. If everything goes to hell, Bitcoin can help you. People will steal your gold, they'll take your jewelry, but they can't steal your memorized passwords from your brain. And as soon as you get to a computer, you're good.
Okay, so, and it's worth the same essentially wherever you go, just in that country's
Right.
dollar, essentially.
It just translates
Okay.
to whatever currency you need it to be.
Okay, that makes sense. Central bank digital currencies. Can you tell me how those fit into the crypto world, or if they do?
Yes. Now I'm
Or are
gonna
they
rant. I'm gonna
different?
rant about this one, so get comfortable.
Okay.
It'll sound crazy, but this is very real. The central bank digital currencies. I'll give your listeners some inside baseball here, as I wrote some of the marketing copy for a major company pushing digital IDs in Europe. That's happening in England right now, but
No.
where Bitcoin is total independence from banks and governments. It's decentralized and entirely self-reliant, all right? Central bank digital currencies are the exact opposite. So a CBDC gives a government absolute control over your money, over its citizens' money. Since CBDCs are a type of cryptocurrency, the government can track every penny you spend in real time. This is great for eliminating welfare fraud and money laundering, but that's what they tell you they're using it for. That's not why the government wants CBDCs. With CBDCs, they can also assign behaviors and program restrictions to the money. The dystopian possibilities here are endless. So say you put something on Instagram that Israel doesn't like. Well, now your money won't work until you make a public apology. Let's say your carbon footprint is determined to be too high. You bought too much meat this week, Mary. So now there's a restriction on your money. You're not allowed to buy meat or gasoline for the rest of the month. Perhaps you get annoyed at the government and go on a big podcast rant. Uh-oh, that's hurt your social credit score. So now you're blacklisted from airports, hospitals, gas stations, restaurants, hotels, and websites. You still have free speech, sure, but now your money is shut off. Refuse this experimental gene therapy? Oh, your money doesn't work until you comply. If you have a bunch of money saved up, they can add an expiration date to your money. So you have to spend it and thus allow them to tax that money. Also, if the government is short on funds and sees you have more money than they think you need, they don't have to ask permission. They can just take it from you, from your account automatically, since the money isn't actually yours. It's allotted to you from the central bank. Does that sound unfair? Well, what are you going to do? Hire a lawyer? With what money? Your money is shut off. The second half of this is digital IDs. So you have a CBDC, the currency, centrally controlled currency, and it's attached to a digital ID. And they're already going live in England, in the UK. Governments will tie the CBDCs to your digital ID and try to sell you on how convenient it all is. This is actually digital enslavement, marketed as safety and convenience. So a digital ID takes everything about you, including your birth records, your bank records, your credit cards, your spending habits, your health records, social media activity, all your movements, every call or text you've ever made, every bit of porn you've ever watched, and conspiratorial thing you've said near your phone. It puts it all in one digital wallet, one unhackable record of your entire life in one spot. Similar to a private crypto wallet, but again, this is government operated. It'll initially be used as a way to differentiate legal citizens from the illegal ones that they've been letting in so openly. Now, it's for your safety, they'll say. You're not a terrorist, right? So what's the problem? Look how convenient it is. And you can try to resist it, and many will, while being ridiculed as conspiracy theorists for doing so. But the change is inevitable. First, it's the people on welfare. They have no choice. Then there's a tax break if you switch to CBDCs. Then the banks offer incentives to switch. Then your employers get forced to comply. They have to pay you in this CBDC dollar coin. Okay? Then eventually you're excluded from everything until you switch, since banks won't support the old system of private bank accounts anymore. Cash won't be accepted anywhere, and they're already kind of moving in that direction. Your only escape hatch is something like Bitcoin. So always have a secret Bitcoin stash for when you've had enough. If you want to see how digital ID and CBDCs would play out, Black Mirror did an episode on this very idea. It's season 3, episode 1. It's called Nosedive. So far, the state of Florida is the only one to outright ban CBDCs. And nobody knew what Governor DeSantis was talking about. But he's like, we'll never do CBDCs here. And the whole crowd's like, what? But he took the lead for his people. Regardless, CBDCs will be a federal move, so states can resist individually, but eventually they'll all have to comply if they want federal funding. If you even remember one thing from this conversation, it's that if you hear any politician pushing for a CBDC or a digital ID, you resist them like hell. Don't give up your guns here either, as that's the main thing delaying it in the US. In the UK, the citizens' voice it's been overruled. Nobody wanted digital ID, but they're being forced into it anyhow because unarmed citizens are not a real threat to their government.
Okay, how do you know that the government isn't going to infiltrate your Bitcoin situation?
Infiltrate it, they can't.
But how do you know that? How are you so sure that they can't security-wise somehow get in it? It just seems like
The only
they
way
have a lot of capabilities.
They do have a lot of capabilities. Okay, so the way the Bitcoin blockchain works is every Bitcoin node has a copy of the entire Bitcoin network on it. Like the entire blockchain is on it. And so if you send a transaction or try to tamper with or try to hack one of these nodes, all of the other nodes sense something is off and cut that one off like a tumor. And so the only way to hack the Bitcoin blockchain would be to hack the entire network simultaneously. And the amount of power that would be required to do that, you would need all of the servers and all of the computing power of Google, Microsoft, Apple, and Amazon all at the same time. Meaning they have to shut everything off and focus on this one task of hacking Andrew's Bitcoin. The cost of that far outweighs the benefit. So the only way they can get my Bitcoin is if I accidentally put my passphrase somewhere that they can get into, like my phone or my computer or something. Or maybe they break into my house and they tear open the walls and they find where I've hidden my password. If I can just memorize it or tattoo it on my ass, there's no way for them to get it from me. I have to tell them what it is. And that's why it's so valuable.
That makes sense. Can you talk about, now that everything's going digital, can you talk about digital ownership and especially how it relates to real estate?
Tokenizing assets. NFTs, non-fungible tokens, have come a long way from just being a picture of a monkey that people buy for $1 million. Right. This is where all the big boys like BlackRock suddenly got real interested in crypto.
Yeah. Yep.
So we're still working on this, and I'm no expert on it yet since nobody is, but let me give you some idea of how this could work. Let's say you have a $10 million apartment building filled with tenants occupying it, and they're paying rent. So there's some cash flow on this property. Finding a buyer for the whole thing is tough. Not many people have $10 million to throw around. But what if we divided the property into 1,000 tokens representing a piece of ownership stake? You could sell half of them on a special exchange. The token holders are now investors in the property and collect a portion of the earnings from the rental income of the property. The token holders can buy, sell, and trade their ownership stake instantly, like trading any crypto. Tokenizing assets then opens up big opportunities to the little guy. So much more commerce is possible. So you could theoretically tokenize anything of value, like a rare painting or a rare baseball card or a rare Porsche. People could buy, sell, and trade a piece of that asset at will. The item itself will have to be stored somewhere safe or managed by some company. That's something we'd have to work out. But if the market demand is there, the solution tends to appear.
It seems like this could help, like you said, kind of the smaller guy invest more, make more money. I almost feel like the big guys wouldn't like that. So it may not be as easy to carry out as we would hope, if that makes sense.
Could be, yeah, or the big boys just tokenize everything and keep it all themselves and then let you invest in like some kind of ETF or something like they did with Bitcoin.
Yeah, it's ours, but you can invest in it. And I could see that happening too. But I guess at least we get a piece of it either way. It just stinks that it wouldn't really be ours.
Yeah.
I'm speaking as a little person here.
Same.
So that's a benefit, I would say, of crypto relating to real estate. Can you talk about some risks of crypto versus regular stocks and just directly investing in real estate?
So Bitcoin is the safest investment there is if you understand its behavior. So if you look at its chart, it's in a predictable, repeatable 4-year cycle, which shows when it's time to get in and when it's time to get out, generally. Like now we're in the 4-year cycle peak. We're at the finale of this past 4 years. If history repeats itself, the time to buy is not now, it's next year when everything's going down hard. Then you write it back up to higher numbers. Again, if Bitcoin has a fixed supply, and as long as fiat currencies like the dollar keep inflating, Bitcoin's value just increases like gold on steroids. Your faith isn't in Bitcoin. Your faith is in governments being lousy forever. Until they get their act together, I'm buying Bitcoin. The last time I heavily bought Bitcoin was in January of 2023. Everyone at the office thought I was crazy. But I had faith in my shitty government being shitty, and I had faith in the cycle. So I bought it at 16,500. Now look at it. We're crashing to 105,000 and people are panicking. But my money is up so much that I know this is how the cycle goes. So the risk is, like I said earlier, personal responsibility. If you're scared of controlling your own fate, there are Bitcoin ETFs managed by institutions. You can buy some shares of iShares Bitcoin Trust ETF, for instance, and add them to your stock portfolio like anything else. But I'd much rather own the coins myself. That's the whole point of it. So you don't have to buy a whole coin at a time. No one's got 100 grand for nothing. You can throw $100 worth of Bitcoin in a wallet and just add to your pile every chance you get. Like you get a nice tax return, buy a little Bitcoin. You got a bonus at work, buy a little Bitcoin. So how does it compare to stocks and real estate? There's risk in everything, but I trust like I said, my government being an asshole and Bitcoin being the opposite of that. I trust that more than I trust the real estate market and stocks for sure. Because with stocks, they're managed by people and people fail. So the reason why I like Bitcoin is that it's decentralized. There is no human that can screw it up. It's just math on computers.
So do you, when it gets super high and you know it's going to go back down, do you take your money out and then put it back in? It's like, do you leave it there? How do you invest in it over time? Do you leave it like you do with stocks when you start young and you leave them there because you know that you can, or do you go in and out?
A little of both. I'll buy heavy at the cycle low, and then I take profits on the way up. So right now, I've already sold off about 80% of my Bitcoin holdings for dollars as it's gone up. And it'll be near, I never sell all of my Bitcoin because that's too risky. But I always hold a little bit just in case it keeps going, right? But yeah, I either leave a little in my wallet forever until I decide to retire and go fishing forever, or I convert the Bitcoin to dollars and back, depending on the value it is in dollars. So I bought it when it was $16,000 per coin, and then I sold some when it was 75,000, then 90,000, then 110,000, a little more at 120. And now that she's coming back down to 105, I haven't sold anymore. Now I'm looking to buy, but I'm not looking to buy now. I'm looking to buy more heavily around like tax time of next year. When people say Bitcoin, that's a scam, you're dumb, that's when it's time to buy it. Because we've done the same thing multiple times already. So that's all. Unless this 4-year cycle suddenly changes, I haven't been proven wrong yet. So we'll have to wait and see. Now, next year, if Bitcoin is surging to 250,000, I know the cycle is broken and we need a new theory now on everything. But until then, I'm going to stick to the plan that we've always had since 2013 or so.
Okay. What's behind the 4 years? Is it the politics? Is it the dollar? What is it?
Well, some people think it's the ISM, the business cycle, but I say it's not. Really what it is there's a halving event, is what they call it, where every 4 years it's in the programming to make it twice as difficult to make a Bitcoin. So before, let's say you're a Bitcoin miner, and you have this huge operation, a warehouse filled with big computers trying to handle all these transaction informed blocks in the blockchain, your reward for doing that is you get paid in Bitcoin, and that's how those coins are generated. But every 4 years, the reward gets cut in half. So to keep making the same amount of Bitcoin, you have to double your computing power just to stay where you were. It becomes twice as hard to make them, which makes them even more valuable, theoretically. So that first year, I don't know what the timing of it is, but leading up to that halving event, a lot of these Bitcoin miners will sell Bitcoin to fund their expansion so they can get more computers in there to get ready for it's now going to be twice as hard to do this kind of thing. And then
that
once
makes
they've
sense.
upgraded, that takes them about a year, and then it starts surging again. So it's this same pattern over and over. And right now we're in the finale of that 4 year cycle, the last quarter of the fourth year. After this is when those Bitcoin miners start selling off their coins that they earned so they can pay for the next upgrade when the halving event happens.
Okay.
Mm-hmm.
Okay, so final thoughts. If I were an 18-year-old and I just inherited $500,000,
Nice.
how would you explain to me, how do I get started? Where should I put it? Do I split it between each? Do I put it all somewhere? Just tell me how to get started.
Okay, 18-year-old Mary, you look great. And I know you're hopeful about your fine arts degree, but serving coffee won't secure anybody's future. So let's spread this money around. Our main objective is to make this pile of money grow. This is not for spending, it's for growing. And crypto is just a part of a larger portfolio. So we'll put half of that money in a Vanguard account. Let the pros handle that chunk of money. It's not exciting, but it grows with the market. And we're not touching that until you get married and buy a house. We'll put some of the remaining money in gold, because why not? And then we'll put some in Bitcoin directly, not through an ETF. We're actually going to buy and own Bitcoins ourselves. And we're going to buy it around seasonal lows, okay? So when people think Bitcoin is dead, that's when you buy some. When everybody's all excited and Sheila from HR is talking about crypto, that's when you sell it, because that's the market top. We're going to keep it all on a private wallet. No, let's do 2 wallets. We'll split it on 2 wallets in case the worst happens. If you want to tattoo your passphrase on your ass. Anything else would disappoint me. Finally, we'll take some of that money and invest it in yourself. Not on hair and nails. I mean to help you learn something forever useful, especially related to finance. Beyond that, just stay out of debt and go outside, and you'll have a happy life. Now, I know I painted a dire picture earlier with some of this, especially with the CBDCs, but you have a head start on most people now. And as long as you see the punch coming, it can't knock you out.
Well, all the 18-year-olds who are listening, if you inherit $500,000, now you know what to do with it.
If you inherit $300, the plan is the same. But maybe you can't give Vanguard $300, they'll just laugh at you and hang up. But you can still buy... You can buy a little Ethereum, a little Bitcoin at $300. Like that, I got started with a small amount of money. It was like either I buy myself some cool wheels for my car, or I take a shot on this new technology, and I did. And now it's my job now. Like I quit being a designer. I just do this. So,
Right.
yeah.
Well, speaking of which, would you like to share your Instagram handle or your YouTube channel or both so people can follow you and learn some more?
Yes, it's whether it's on X or Twitter, Instagram or YouTube, my name is the same. It's Crypto Guy OTI. It means Crypto Guy on the internet. So Crypto Guy OTI. I'm on Instagram posting charts and jokes every day. On Twitter, it's mostly just me arguing with Protestants. But on YouTube, I put out a big video once a month where I go over all the charts and my plans and all the price targets and what looks interesting. And you can comment or you can DM me directly with whatever you're working with. And I love talking crypto with total strangers. So hit me up, Crypto Guy OTI. Yep.
You reminded me with your comment about strangers. Andrew wrote a book. It's on Amazon. It's called Talk to Strangers, and I love it. It's great. He loves talking to strangers.
Thank you.
Yeah, it's great. Well, thank you for being on the show, for being my first guest. This was fun, and I learned a lot of things. So I appreciate you.
Anytime. I'll talk to you later.
Talk soon. Thanks, everybody, for listening to Pretty Broad Pod.